Okay, guys. Um, let's see. Let's check. Let's check if we're here. Let me know in the comments if you are here, so we can practically move on. Okay. Let's give it a minute. Okay, seems to be working. Hi guys. Okay, so this would be a quickie. This would be a quickie, because slightly in a rush because Bitcoin's going mad. Like few people know really what's going on. And I got some interpretation of yesterday's and today's events, pretty much, right? And let's see what we can come up with. So we will just yeah, guys, we will get a quick scan through the 4 hour chart and perhaps like a daily to see where we're going, right? But what I can tell, and which I am damn sure about, is the fact that we have been like 100% purely manipulated regarding the market making, right? I mean, it's not a surprise that on every market in the world, every financial market in the world, either these are indexes or indices, forex, or just crypto or commodities, whatever else, right? On every market there are market makers, there are whales holding the significant share of the whole market. Take, I don't know, like just imagine, I don't know, Warren Buffett playing Bitcoin, right? So anybody that is holding a big share of given asset, of given instrument, tradable instrument, can pretty much pose an desired impact, on such market, right? So market making is a fact. Okay, this is not like a legend. This is not like a shit that people keep talking simply because they cannot explain things. But as a matter of fact, if you go and dive and what in 5 minute fucking candles, let me just show you that. Okay, somebody like current price action is quite different, obviously, to the market bottoms near 3K, right? That we are in December last year. So back then it was quite easy to make the market pretty much because of the decreased liquidity back at the bottoms. That is very usual and typical to market bottoms. So overall, whenever you wanted to buy Bitcoin, fast and as cheap as possible, you simply and at the same time wanted to put like millions on the table, not like 10,000s, right? But 10 millions per position, let's say 10 million per position. Then you simply needed to market buy that, right? Traders were not active back then in December, which per slight comparison brings us to yesterday's events that we were seeing like this. Take this candle for example. What was that? It was ranging like $700 in 5 minutes. Okay, so somebody must have really thrown in like massive money on the table to be actually able to pose the same impact, just per comparison, per analogy to what was back then at the market bottoms, right? When nobody was trading Bitcoin pretty much because people were too afraid. Like institutional money were slowly accumulating, because if they didn't want, to slowly accumulate, they would have need to simply market buy that shit, right? And hence, what I'm saying is that if you want to market make higher above the market bottoms, which is, I don't know, 300 percent above the market bottoms, let's say, or just slightly less, whatever. you need to have like massive money to actually, you know, flip the trend, right? So we were clearly and what I'm trying to show, like such candles like bottoms, the candles that are, you know, bottom and then top shaved very often, shaved, which means that they're having no wicks, right? No lower shadow on this very one. So these are the market buying candles, okay? These are the market buying candles, and these can happen only for like at this very current market moment. This can happen only on the basis of big money injection, okay? And to pose exactly the same effect as it was, you know, back then in what in let's take this 4 to 5k candle perhaps in what it was March. No, sorry, it was 1st of April for the April Fool's joke. And yeah, so that's it. So these are market buying candles, okay? So somebody just bought, you know, used the opportunity, actually used the opportunity. Let me bring this shit back here. Where's that? Here we go. So let's simply see how it goes here. So we had this potential Head and Shoulders, right? We established the for 13.9 high for the first peak, right? We had the ABC correction. We had we had the next seemingly impulse, right, that failed here and ended up making lower high near 13.3. Then we had this awful candle. Ranging down from 13.2, 13.3 towards 12.1, right, or 12.2, whatever. So massive drop down within 4 hours, okay, which was again the market making using actually the liquidity, okay. You need to understand, guys, and remember that market makers, the whales, are foxy. Okay, they are foxy because their task, actually, sorry, not ask, but their task is to trap you. Their task is to trap you because for big money, you need to have liquidity, right? You need to have the counterparty that would, if you want to long it, that would just sell it to you, right? If you reverse it, if you want to short it, then somebody must buy that from you, which means that to play with as small slippage as possible, with big millions of dollars worth of Bitcoin, you need to trap the people, right? So see what we had here. We had this kind of like a bouncy area here, right, from 10.8 to 11k, and simply because market considered that low, that very zone to be strong enough to stop the sell-off from above here, and at the same time to resist dropping further and establishing higher low for the practically establishing the higher low zone for the first time since the big drop, right? Because we had the high, we had the low, we had the lower high, we had the lower low, and we started the new like somewhat of impulse wave, okay, complex wave, of course, and ended up failing that. We had like this swing failure pattern, SFP, or however we call it. Simply that there was this one candle bull trap, okay. People see, I mean, we had made the new lows right before the price actually the new highs, obviously, right before the price gave this big dive towards this 12.1, right? So and yeah, hence we got just to confirm the strength of this previous 10.8 to 11k area for the bouncy zone, and hence formed of something of similar height, right? If you compare that these two peaks, we can definitely picture that as a form of a Head and Shoulders pattern, right? And Head and Shoulders obviously needs the breakdown of the neckline zone here for the bounce area to be actually validated, right? So what we had actually, we had let me just perhaps turn off the magnet mode. So what we had was a typical and very classical, I would call, breakdown of the structure, right? So we get like breakdown from this zone. We have gone through. Let's perhaps, I don't know, make it maybe bigger somewhat. We had to establish. We had to, what the hell? We had to establish, the low, obviously, after the breakdown. Okay, so we got the breakdown structure here, cutting through these previous strength of the buy and of the demand zone that ended up every single time with a solid bounce. Okay, for recent weeks, and what we got this breakdown. We get this breakdown structure to perfectly retested, confirming practically the support resistance flip, or just the inflection zone, or however we call it, right? The inflection zone or layer. It's not a point because it's not a simple price, but a single price layer, but it's like the zone of price, right? Because whenever we talk about supports and resistances, we need to respect the fact that the support is more complex than the support is the support, because these are accumulated long orders, right? But long orders are not like, it's not like the whole world is just long in one single price, right? So you get like this normal distribution very often. Normal distribution per levels, right? Which can be somewhat depicted by this VP/VR volume profile, real value, or however you call it. It shows you slightly this normal distribution, like on the volumes traded at some levels, but at the same time it expresses the liquidity and hence the number of orders per given price level. And go and check it out on TradingView as well, right? So what I mean, you can go and check that here. Here it is, volume profile, visible range, or and here it is, right? So it shows you like this normal distribution. This is a statistical, mathematical statistical expression phrase. So go and check it if you're not 100% aware of that. You got this normal distribution for levels, right? That were that are like here, bearing the greatest volume, but we can, per similarity, we can express the idea that the zone, the support should be considered a zone, because the support is not only a single price, right? The level that we are drawing of the resistance, or of just a single level. What the hell's going on? Damn, sorry for that. So it actually is the zone. It actually is the zone around it, right? While you're having this this part here, right? So it actually is the whole zone over that, not only the single layer, bringing the resistance, right? So that's what I mean. And that's why it's a zone on the single line. Okay, so we had this perfect retest. Okay, we had this volatile and awful rejection of the same retest, and actually the structure diving deeper towards the target of this head and shoulders, right? And when we had this zone, this key zone as well, of of the market flipping practically the structure here, we could see that I call this zone to be the structure breakdown zone here, because simply once it was through that, with the candle cutting through this zone, this structure breakdown zone, as I called it, it made the market actually break at the same time this key neckline of potential double top, right? Which means that the market flipped bearish, pretty much. The market flipped bearish, and hence everybody is, in crypto especially, is impatient, which means that they would be likely, shorting the breakdown of the key neckline instead of the retest, right? And what we had here only is what we had this breakdown of the structure here. If you see that, let me just perhaps point it, I don't know, red, whatever. We had this breakdown of a structure, and hence we got slightly hanging above the head and shoulders target, which was around 85 to 87 100, which was my personal target, and probably everybody's in the world apart from me the target for the correction, right? Because of the CME gap, for example. So yeah, we had this one, and it was a perfect opportunity to trap bears for bulls, right? And somebody just market bought like millions of worth of Bitcoin because everybody was shorting, right? So if everybody is shorting this level because of the breakdown of the key, high time frame, bias actually, flipping like level as well between these two red horizontals, right? So they had enough liquidity to counter trade it, and at the same time buy Bitcoin as cheap as possible with possibly low slippage on that, and which was still quite big, right? Which means that the whales decided to consider that cheap, right? If they consider that cheap, it means that we should be considering it cheap as well, in Humaita's opinion, right? So we had this part. Let's mark it red as well. As I said, guys, I mean, this is a quickie. Just to explain very shortly and briefly what we are heading and what we are experiencing right now. We had this naturally quite market, making process up to practically 10.8 with very little correction around what was that 96 to what 99, right? So it was like a short sideways on low time frame, on hourly, on 15 minute, and we had this massive yesterday's candle session 12 or even hourly session, just market buying of Bitcoin, where millions worth of Bitcoin for trapping people once again, okay? And that's practically, guys, the reason to retest the same inflection layer, which I consider to be the crucial to establish the bull zone over the neutral zone or just the bear zone. And hence we got after that we had the retest of that strong, very harsh rejection against some short some market making, right? And many SFPs on the way, because market very often on lower time frames made new highs but at the same time closed below them, making it actually some failures of breakouts above the ranges, and and very volatile bearish pressure on that, which means at the same time that we were aiming to retest potentially this flip zone, this high time frame structure breakdown zone that I consider to be crucial, which market actually confirmed to be crucial, right? Because it bounced here, it bounced just broke down the structure, trapping people at the same time, and like majority of market, everybody alive and their dogs and their aunties just were shorting this breakout of this potential double top structure, right? High time frame. And this very rarely happens, especially on the high time frame, to be very credible, I would say, signal at all, right? So that's why we very often suggestively wait for the breakout or breakdown retest to actually decide on a trade or not. And if we are trading here and potentially testing this zone that flipped from support to resistance, that just was pretty much broken and trapped people over this very ugly drop down candle, we had this SR flip once again, to retest this highs of the inflection layer, and just possibly the same retest over the structure breakdown zone, at the same time making it a support and testing it as a support from the upward, right? And hence we can expect some volatility definitely over here, which we had already seen, just recent hours, for the recent hours. And what we can expect, if market is really truly bullish, then it should bounce. And the bounce should be definite and infinite to actually make it strike through the inflection layer and making the bullish zone once again over the neutral zone, right? So we're having the inflection layer, we're having the structure breakdown zone. Between them is a neutral zone, which we technically should be like 50-50 perhaps, right? Because simply we are waiting for the market makers to decide which way the fuck they want to go, and we can do not much about it. And yeah, so what below that, if we drop below the structure breakdown, that I can, there's a very strong probability that we're heading towards this head and shoulders full target mode, and hence slightly like practically fulfill the the bearish destiny and fulfill accomplish 40% correction since the very top, which I just for the reminder mentioned that usually market on Bitcoin before making new all-time high year by year, I mean just cycle by cycle, right? It was going always like 30 to 40% correction, most often like 35 to 40 from what I can tell. And so yeah, if we break this high time frame structure, we are pretty much fucked, and the bulls are fucked somewhat, right? And just go into head and shoulders target, I assume, for the 8.5 to fill the CME gap. At the same time, for the confluent target, as you can tell, for many technical reasons. And if not, we are just consolidating here in the neutral zone for now at least. And practically, we should base our trading, further trading, simply on the fact or on the assumption of whether we break out or break down to the bearish or bullish structure, right? So that's what I mean. I consider above 11k to be bullish. Okay, if we break out, let's say where's that? Where is this paint? Here it is. So let's say if we break out, right? We consolidate somewhere in low time from here, and we break out on this range that we make here. It means pretty much that we are in bull zone once again, and practically making it potential for new highs, in my honest opinion. Now, for the breakdown, we would just slide through down to below the structure of the breakdown, consolidate below perhaps, and just strike it through towards the CME gap direction. And where's that? Yeah. So if you gauge on the momentum, we are seeing some definitely bearish momentum flip, which means which was not hard to spot after this a very ugly candle, which means we are correcting a low time frame, okay, which may come to an end like today or tomorrow, or just I don't know, during the weekend. Just remember, the action is limited during the weekend for people, especially for some more institutional exchanges, just CME take, right? And what I mean is that we practically should be, in my opinion, like 50-50 here, because simply it is a neutral zone to me between the bearish structure breakdown zone potentially and something that assumes and accomplishes, in my opinion, the bullish structure and brings it back to traders to potentially establish new highs, and just who knows, perhaps just a strive towards new all-time high. And that's it, guys. I mean, bullish structure on daily, because we got like this bullish bullish momentum, right? We got this bullish candle, bullish momentum flip on 12 hours. Per similarity, we got this, bullish momentum as well, flipping, and momentum itself remaining bullish. Hence, we are considering that for now only low time frame correction, and depending on where it unfolds, we will be knowing where we are heading. And that's it, guys. Right? That's it. And in case we fold, in case we unfold this inverse head and shoulders, right? Because we had we made the potential shoulder, the head, and potential shoulder part 2. Now, and if we break out on that, we can assume that potential target of that move would be around 13k, like 12.8, 13, right? And that's it. So let's watch it, guys. Let's see how it goes. And that's it. I'm sorry, I will not be taking for now these questions. You need to please forgive me, and we'll get that on the next session. Hope you enjoyed that. It was a quickie, and yeah. So that's it, guys. Let's stay in touch. Bye.